So here's a warning for private equity investors in the circular economy. Don't get too excited. Over the years, I've seen how some investors get excited about the investment opportunity of the century, jumped into it, only to eventually fail. More recently, I've been looking at the battery recycling sector, and I'm now watching the Ascend Elements bankruptcy with some familiar feelings. The feedstock timeline that is now humbling some of the best capitalized North American battery recycling firms was never hidden. In fact, serious research from the IEA and in academic circles published a bunch of data on this. For instance, and if you need evidence with academic rigor, consider the 2025 Royal Society of Chemistry study that made it explicit, made it clear that EV batteries last 12 to 15 years. And so if you were to do due diligence for an investor, you will know that a battery sold in 2022 does not enter the recycling stream until 2034. That's the earliest. The arithmetic was available to every investor who founded this sector between 2021 and 2024, and you would think the calculus would lead to the conclusion that any investment today will have to wait for a return in the out years. The money went in anyway. I have been talking to operators and a few investors who were in those rooms, and of course willing to talk to me, and the explanations I hear are consistent. The critical minerals security narrative was politically powerful and financially irresistible after the Inflation Reduction Act passed. Federal grants were essentially absorbing a significant portion of the downside, which changed the risk calculus. And there was genuine pressure to deploy capital, essentially funds raised on the energy transition thesis needing credible destinations, and battery recycling was one of a limited number of those destinations available. The result was the classic infrastructure overinvestment pattern. Capacity built for a feedstock curve that exists in projections, not in reality. Lifecycle, Ascend Elements, two major operators in creditor protection within 12 months of each other. Now, ITAD has avoided this so far. Here is why, and why that may be problematic in the long run or may not last. The ITAD sector looks different from the battery recycling in one important respect. The feedstock is already there. Enterprise IT refresh cycles, the Windows 10 end-of-life migration, and of course the first wave of AI infrastructure decommissioning are all generating device volumes right now. Now, unlike battery recyclers waiting for 2034, ITAD firms are processing real assets today. They've been doing this for years, a reason that the sector has largely avoided the distress visible in the battery recycling sector. But I would not call ITAD structurally safe. Here are a few dynamics that I'm watching closely worth remembering. The AI hardware wave is coming, and no one knows exactly what it will look like, how to value and process GPU-dense server infrastructure, and that will be at scale. The first real wave of decommissioned AI servers from hyperscalers who deployed heavily between the year of 22 and 24 is projected to hit between this year, 2026, and 2029. The residual value in those racks is high, the processing complexity is greater than standard enterprise hardware, and the secondary market for used GPU is clearly volatile, as you know. Obviously, the operators who have not built the technical capability to deal with this class of hardware, like grading, pricing, routing it, etc., are going to be at a disadvantage. Some will have invested in the capability too early before the volumes arrive. Others will have waited and will find themselves overwhelmed when they do. Consolidation is coming. It's already happening in some ways. As you know, the ITAD market is fragmented. Hundreds of regional operators, a handful of large national players, and a growing gap in AI and compliance capability between the two tiers that I've just mentioned. PE money has been flowing into the sector, and I expect the next 2 to 3 years to produce further consolidation in the sector. And that creates opportunity, but clearly it also creates the overinvestment risks I described in the battery recycling earlier. If capital floods into ITAD platforms before the compliance and AI grading capability is actually proven at scale, we will inevitably have the same conversation in 2028 that we're having about battery recycling today. So the lesson I keep coming back, that the circular economy is a genuine long-term investment thesis. But long-term thesis and near-term business viability are different questions, and capital markets have a persistent tendency to treat them as the same question when the narrative is actually strong enough. Battery recycling is teaching us that lesson expansively. ITAD has the feedstock advantage that battery recycling lacks, but feedstock alone does not build a defensible business. Compliant capacity, technical infrastructure, and of course the organizational capacity to handle what AI hardware decommissioning actually looks like are the variables that will separate those who will be able to claim that they are competitive, the winners that is, from the next round of cautionary tales.